We missed you on Fed Day, but we can get your thoughts now on how things are shaking out. How would you grade Jay Powell for his performance on Wednesday, opening the door to a rate cut without making it look like he's capitulating to the president's demands and the bond market's demands?
Well, look, I think, Scarlet, in terms of what the chairman was trying to achieve, he did a pretty good job. I think the message is loud and clear, and that is that growth is the overriding issue, and all of the debates we've had about, inflation, concerns about, financial instability as a result of inflating asset prices are basically not even on the radar screen. Growth is it, and that's going to open the door to the Fed becoming, I think, very aggressive. I think we'll get a rate cut in July. We'll probably get at least, there'll be at least one more. I would expect two more this year. And I think we're setting ourselves up for, a period of inflating asset prices, which ultimately is probably not sustainable.
Not sustainable, interesting. But in what would the impact on inflation be? Because interestingly, Neil Kashkari coming out saying you need aggressive action, we needed it sooner than July to re-anchor where inflation expectations go. If we do get aggression coming in July, is that enough, do you think, to push up inflation expectations?
Well, Caroline, that's a good question. I think over time, I'm not sure it'll come as fast as July, but I think it will build over time. Our own work shows that just looking at year-over-year comparisons of the various components of the PCE, we would expect the PCE to have risen to somewhere in the neighborhood of 1.9 to 2% by the end of the year, even without the action by the Fed. So I think it's very likely that after a number of rate cuts, we will start to see inflation pick up fairly significantly. And, I liken this to the period we had in 1998, where during the Asian crisis, there were, economic pressures from overseas that ultimately spilled into our economy. The Fed cut rates by 75 basis points. And then a year after they had cut rates, they began to raise rates and actually ended raising rates higher than they were when they had started their rate cuts.